So we're going to talk, of course, we're talking about cross-border
Mm,
interoperability in terms of the context of open banking. Why is this important for Mastercard?
that's a great question. So let's start with why is open banking important to Mastercard? And then we'll talk interoperability. I mean, open banking for Mastercard, we are committed to giving consumers and small businesses more control over their data and their payments. And as such, we've got a large and growing open banking business, both in the UK, in Europe, in the US, and in Australia. And I guess that gives us the framework for why we look at this interoperability sort of question. When we think about interoperability, we think about it's about enabling companies to connect into as many banks as possible in as many different geographies as they wish, as smoothly as possible. And what interoperability is doing is like making that process as smooth as we can do. Why are we as Mastercard interested in that? Well, I guess it's Mastercard's. It's part of our DNA. You know, we've been facilitating payments and data globally for getting on 50 years, whether that's through card networks, account-to-account payments, and now very much through open banking. And it's the heart of our open banking propositions where we're providing access to thousands of banks through a very simple interface that's got us into this debate and this discussion. Interoperability and making it smooth is what we're about. And what our customers are asking us for is very much that ability to do their open banking across borders. We've got a number of our clients, particularly in the Nordics, who want to work not just in one market, they want to work in Denmark and Sweden and Norway and Finland. And if to work with them, that they want a consistent way of doing that. And therefore, it gives us that challenge of how do we make that process smooth for them and their customers? How do we make it the same as possible? We've got regionals across Europe, people, we've got an investment company working with us who want to be able to take payments from any bank account across Europe and bring that in and present their customers the same experience, whether they are paying in from France, Germany, Denmark, or the UK. And what we're thirdly seeing is that some of our big global clients who are sort of doing open banking in, say, the US and successfully doing it there want to bring their propositions to other regions. And therefore, that topic of how we do that and make that easy for them is what's fueling what we do for sort of around open banking and interoperability now. So we are very much it. Why is it important to us? Because open banking is important, interoperability and connectivity is what we do, and our customers want it.
Yeah, you have to forgive me because I have a bit of a follow-up question with this. Over the years of, looking at improvements and progress in payment systems, I've always been observed how the card schemes really try to keep themselves in the loop. And I've often thought that open banking is kind of would take the cards out of the equation. But if you're looking at like the role Mastercard card schemes play in the world, it is that ubiquitous global access point. Is that how you're kind of positioning yourself as being that we will help with interoperability because that's what we do globally anyway in this
absolutely
world?
Yeah, absolutely. I mean, we are it's beyond cards. We Mastercard that's our heritage is cards, but we're involved in all sort of payment rails. It's about payments and it's about facilitating payments around the world, whatever that underlying payment rail is, making it simple and easy and secure for our customers to access. That's very much what we're about, and hence why we're very active in open banking.
So Helen talked a bit about plugs and sockets internationally. What are some of the benefits of this cross-border interoperability?
Yeah, no, I think ultimately, the greater the level of interoperability, the stronger and more vibrant the open banking ecosystem will become. That's kind of what I strongly believe. And if I look at it from kind of two dimensions of why I think that, if you look at kind of the end user and why there's benefits there, is that we see that end users, increasingly consumers will bank across multiple countries. They'll have bank accounts in Germany and France, and therefore they will want to manage their money in the same way, in the same consistent way. You have businesses who want to collect payments from across borders, and they want alternatives to cards. And so from that perspective, the benefits then of interoperability is giving them choice and giving them a range of services they don't necessarily need to do, and reducing, making things more convenient for them. The kind of the second lens that I sort of look at it, or second dimension, is very much from the people developing apps. If you're developing solutions, if you can take the same solution and move it across markets with less tailoring required, it's more economically viable for you. And therefore you can take it to more markets and you can expand. It creates opportunity. So more interoperable, the wider you can take your products, the more you can sell. And then if you take those two dimensions together and macro it up from a sort of market level, what you're doing there is stimulating innovation. You're making it justifiable for people to make the investments, particularly in smaller markets where you couldn't necessarily justify the investment if you're just targeting one small market. But if you can put a number of markets together, there's a reason for it. Yeah, so the business case becomes stronger. And if you've got that sort of innovation and richness across borders, you're driving up competition. Competition will get into better products. You're reducing barriers to entry, which makes it easier for people to do. And then that swings back to the consumers, that you're getting increased choice and increased range of things you can do. So overall, I think it is very much, more interoperable it is, the stronger the ecosystem, the more players that you're allowed, and then the more you can bring in.
So what are some of the challenges we're facing then?
Yeah, no, that's a good question. That is a very good question, because on one level, you look at open banking and you go, well, banking is banking, isn't it? It's all about payments and it's about, statements, and they're the same. And if you think about the way, particularly in the EU, that open banking has been designed, it is very much about facilitating cross-border interoperability. It's been designed so that entities in various markets can operate. But I think where the challenges are is I would pull down, it's very much into the small things make a big difference. And I think that's where you go. So if you start down sort of the real sort of fundamental level about the data between different markets have different data. So for example, we've got a client who working very well in France with a credit decisioning model using data pulled from French banks. They wanted to go to Spain and take the same model there. And what they found was that when we looked into the details of the Spanish market, there were a couple of data fields that made a big difference that just weren't available. The banks didn't provide a marker, whether it was a business or a personal account. And that fundamentally changed the way that the credit scoring model they designed worked, and therefore changed its viability and its attractiveness for the Spanish market. You also look at within individual the data from a payments perspective, it can also be different in terms of, we do a lot of work in the Nordics and billing in the Nordics. There are very specific codes that you need to attach to transactions to make a billing payment pass through. And there's some real anomalies that you get in terms of telcos in certain markets have to have a certain sort of code length. All of these little things, whilst on the size thing, don't sound big, but they make a challenge, they create blockages, and they stop business cases coming. So you've got this kind of data level. You've then got the way the banks themselves work and interpret open banking changes. So different banks do things in different ways. So a very simple example where we've done a lot of work at the moment is around status codes for payments. Has the payment finished? Has the payment completed? Banks can give you the same answer and it can mean different things. And that's really important if you're building, say, an e-commerce use case, because you want to know that the money's arrived before you ship the goods. And if you get different answers from different banks, you're creating uncertainty, and does the proposition actually work? So data is different, the banks can be different, and then you've got standards, and standards vary. There are, even in Europe, there are a number of different standards, and the standards, technically, they should make things easier, but differences in the standards mean that things operate differently in different markets.
The great thing about standards are there are so many of them.
Well, exactly. And trying to get them all to work together is the real challenge. I think in terms of, if I look at markets like Germany, in the German market, you have a requirement that you need to include, when you make a payment, the details of the sender account, who's sending the payment, that needs to be submitted. And that's very different to the way it works in the UK and France. And that means when you're trying to do payments in Germany, you're adding extra friction into the journey. The customer either has to know their bank account number and enter it in, or you have to create another step in the journey for them to authorize getting hold of that bank number from them, and so you pre-populate it. So you're creating more friction. So the standards challenge. And I guess the final challenge from a sort of a macro is For interoperability to work, you've got to have the willingness to embrace open banking. And I think what we see is that in markets where the regulators and the banks were willing to tackle and committed to it, you get a much better adoption, and you smooth out some of these areas. In markets where the regulator maybe isn't so bothered, that's when it's harder, and trying to create interoperability between that market and another market is very hard. So there's a number of challenges at a number of different levels. And I think particularly in the world of open banking, what's going to make it even harder is that we're already in flight. So we're already seeing open banking being hugely successful across Europe, millions and millions of transactions. The banks have invested millions of pounds, if not billions, to put their infrastructure into place. And if we start talking about interoperability, the way we do that has got to be a way that minimizes the amount of change they do. Because otherwise, it's a bit like trying to change the engine on an aeroplane when it's already in flight, which is not really a very good thing to do.